Hi, everyone. Todd Rosenbluth of TMX VettaFi. I'm joined in the New York studio by my friend and colleague, Cynthia Murphy. Cynthia, how you doing?
Hey, Todd. Always excited to be here.
Well, it's been a great year. In fact, a record year for ETFs in 2024. We have lots to discuss. We're about to hit perhaps an overall record for ETF flows. We passed the record for fixed income. We passed some individual tickers. Let me let you dive in deeper.
Yeah, it's almost like setting new records is a lifestyle now in the ETF industry. We're about to see potentially the first $1 trillion in flows in a calendar year. We are already ahead of last year's pace. In 2021, I think, was a record,
Right.
just over 900 billion. So this could be the new thing for us, $1 trillion a year, and we just keep on growing. I don't know if we're at record, but a lot of new products coming to market, still a lot of first of a kind, believe it or not. So it's been an exciting year.
Yeah, and so what we've already done, we've already passed the record at the end of September for fixed income flows. And money has continued to flow in as we're recording this in October. We could see close to $300 billion of money in fixed income ETFs. So as you know, it's roughly 20% of the overall ETF pie. It's punching above its weight. Again, in 2024, we, of course, have had a unique fixed income environment that we'll dive into a little bit more. But I also want to note that we have already passed record flows for an individual ETF. The Vanguard 500 ETF, VOO, was the first one to pass that old record. And now iShares S&P 500 ETF, IVV, has also done so. I'm a baseball fan. It reminds me of when it was McGuire and Sosa breaking that record, racing to do it. And both of them had amazing years. Sosa is less remembered than McGuire for having done so, but it's baseball playoffs here in New York, and that's top of mind.
Well, I got nothing to add on the baseball front.
Well,
But
well, you're a Chicago woman.
we're
so-
talking what, $100 billion coming into each of these funds.
We could have that. We're not there yet, but we certainly could have that.
It's an insane amount of money for a single ticker. It's really a land of giants. Some of the top ETFs are impressive numbers.
So let's transition for a moment, and now let's talk just about equities. What are we seeing so far in 2024 for the equity markets and certainly on the ETF front?
I think what's been, this has been the year of AI, a conversation that doesn't go away. And I think we're going to be talking about AI in different iterations. What's that? Where is that story moving? 2025, potentially 2026. I think it's a long-term theme that is just really getting started. So I think we're going to continue to see that. But I think we've seen like a little bit of a transition. It was all about the Mag 7. We saw a lot of those, heavy Mag 7 funds perform really well, attract a lot of assets. And now we've seen also that momentum kind of start to fade. And we saw some valuation come into play. So value ETFs got some traction. We saw small caps find some moment there. So it's been almost like a 24-year transition from the big growth, big heavy tech story to now we're broadening that conversation.
Yeah, and we've seen quality or free cash flow oriented ETFs be popular in 2024. We are the index provider behind VFlow, which is the Victory Shares ETF, which hit $1 billion in roughly 16 months. But it's not alone. We've seen demand for quality ETFs from iShares, from Invesco, among others, that we've seen the trend. And we started to see, once the Fed cut interest rates for the first time, that there was a rotation, more of an acceptance of small caps. Mm-hmm. Small caps have historically done well during a falling rate environment. Now, they were so far behind that if you look at the performance charts, they're still behind the mega cap growth. But that's something we could be seeing in 2025, is a return to the asset allocation where small caps becomes part of the story.
Yeah, I think that, cheaper access to capital really changes the equation for the small cap value prop. So I think it makes sense. And a little bit of that valuation screen too. Their PEs were much lower. It's just a more opportunity, where in the mega caps valuations are a little bit stretched in some segments. So it makes sense. That whole broadening of the rally, that whole diversification effort, we're seeing that in the ETF flows.
So I want to transition again. So
Let's.
Another big theme in 2024 has been actively managed ETFs. They have been increasingly gaining scale and size in the last couple of years. It's now, again, going to be roughly 30% of the ETF flows towards active ETFs, active equity ETFs, active fixed income ETFs. In fact, this is being recorded in advance of a fixed income symposium that VettaFi is hosting with a lot of active managers from Vanguard and T. Rowe Price and PIMCO and American Century, among others. What excites you about active management in 2024?
You know, what I think is really exciting is that if you look back throughout the year, we've talked about active all year. Nobody's talking about fees in active. So it's almost like we finally crossed that bridge of that barrier, which was all active is expensive, therefore is out. I think with markets got more challenging the last couple of years, and all of a sudden a lot of active managers have delivered a lot of value. And so I think investors are embracing the value proposition of active management and ETFs beyond the conversation on fees, which was so tired. And so I think it's been a good sign for active in the future, because we now are really looking at managers. What are they delivering? Is there really value there beyond just the fee?
But the fee has also come down quite a bit.
A lot.
So we have active fixed income ETFs that are 20 basis points and below. In fact, there's some that are even 10 basis points and below. When you have some of the larger asset managers that can bring scale to the business and they want to win, or they want to have some success, they're going to put their heavy weight behind it. So we're not seeing the 100 basis points or 75 basis points products. Now, those exist, but they're not coming out from some of the larger asset managers.
Yeah, I think if you look at the weighted, expense ratio average for active as a category, it's under 40 basis points. I think it's like closer to 35. So it's come down a lot. It's very compelling.
So we covered a lot so far about 2024. I want one last transition. In 2025, we are going to be together. I mean, we're together right now, and that's wonderful. But we're going to be together with the ETF community for the Exchange Conference in Las Vegas. I'm really excited about that. We haven't had a West Coast presence in the ETF industry for a while. The asset managers are joining, the advisors are joining. Tell me quickly what you're excited about for 2025.
Oh, I'm hoping Elvis Presley will make an appearance again. If you haven't seen the photo, check out social media.
Guilty is charged.
Yeah, no, I'm excited. I'm excited. The new location feels like infuses a new energy into the event. So I'm excited about that. And all the conversations we've been having with both the advisors and the asset managers, there's so much energy about it. There's so much to talk about. I think product innovation keeps this space so exciting. There's always something new to uncover. The macro picture is very challenging and moving very quickly. We have great speakers coming to give macro perspective. So it will be educational, it will be fun, it will be, hopefully, feels like one great happy hour too. So I'm excited. I love that event.
Yeah, the community is going to come together. So I'm excited. I'm excited that we'll be there together on stage for a couple of events as well. So that's a wrap up of what's happened in 2024 and in 2025. To learn more about what Cynthia and I are writing about, visit etftrends.com. That's one of the properties that we have. Please visit us, our company, or us personally on social media. You can find us at VettaFi. That's the handle that we have. Cynthia and I both are on social media, on LinkedIn in particular. And we'll see you next time. Thanks a lot.
Thank you so much.